Did you know that 97% of direct tax collections accrue either by the way of advance tax or tax deducted at source? Did you know that less than 5% of India's adult population paid direct taxes? Did you know that the government of India is the biggest litigant in tax disputes? Hello and welcome to another edition of Capital Calculus. I am your host Anil Padmanabhan. Last month, the outgoing Revenue Secretary Sanjay Malhotra publicly cautioned his department. According to him, mindless tax overreach was beginning to hurt industrial investments. This trend, if unchecked, he argued, could kill the proverbial golden goose. The thing is that the Revenue Secretary is not alone. Several other commentators have argued similarly. In fact, one claims that the current regime of tax is extractive in nature, a carryover from the colonial era. To unpack these dire warnings, both from within and outside government, I spoke to Arvind Datar. He is a senior advocate in the Supreme Court of India and often crosses swords with the Revenue Department over tax disputes. Hence, he is someone who can give a ringside view of tax overreach and its implications. But before that, here is a quick explainer on the problem of tax overreach.
India has long been a key destination for investment due to its large market, skilled workforce, and growth potential. However, tax overreach by the Revenue Department has historically discouraged both domestic and foreign investments. Here is an overview of how this happens. 1. Retrospective taxation. India faced global criticism for introducing retrospective tax laws in 2012, allowing the government to tax past deals involving indirect transfer of Indian assets. This affected companies like Vodafone and Cairn Energy. Retrospective taxes created uncertainty and eroded investor confidence, as businesses faced unexpected liabilities years after their transactions. 2. Aggressive tax collection. Revenue authorities often adopted aggressive methods to meet tax collection targets. Businesses reported receiving arbitrary tax demands and notices, sometimes based on unclear interpretations of tax laws. Tax disputes amounted to 9.32 lakh crore rupees, as highlighted in the 2020 budget's Vivad Se Vishwas scheme, reflecting the scale of unresolved issues. 3. Lack of clarity in tax laws. Complex and ambiguous tax laws made compliance challenging for companies. This left room for differing interpretations, often leading to protracted litigation. Key areas of contention included transfer pricing rules, capital gains tax, and the introduction of the Goods and Services Tax, GST, which initially had compliance challenges. 4th, slow dispute resolution. The Indian judicial system struggled with a backlog of tax cases, leading to delayed dispute resolution. Businesses were forced to keep substantial funds locked up during litigation, reducing their capacity for investment and growth. 5. Impact on foreign direct investment, FDI. The uncertainty created by tax overreach led many foreign investors to view India as a risky destination. For instance, Vodafone's $2 billion tax dispute dented India's image. Cairn Energy sought international arbitration, leading to reputational damage for India. Lack of consistent policy and investor-friendly tax practices are hurting India's prospects as a competitive investment destination.
I began by asking whether the recent warning by the outgoing Revenue Secretary and the controversy over GST tax on popcorn are a signal that tax overreach is threatening industrial investment and, like the Revenue Secretary argued, kill the proverbial golden goose.
Actually, there are two different things. They're not to be conflated. This popcorn thing attracted a lot of media flack because it sort of highlighted the complicated nature of GST. It also highlighted the attention paid to relatively insignificant things. I mean, at the end of the day, how much more are you going to collect by taxing caramel popcorn at 18% and lesser popcorn and other popcorn at lesser percentage? So it's basically like the Parkinson law that what is attention is inversely proportional to its importance. You miss the main stories and you get into the minor issues. And that's been a chronic feature of the GST Council. Increase some tax there, reduce some tax here, add GST. But the main macro issues remain unaddressed. That was why the media also, and see, they just want something sensational. So popcorn was a good, interesting media story to take it up. So that's one part of popcorn. The other thing of Mr. Sanjay Malhotra was on a much more serious issue. What's happening on the ground is there have been extremely exorbitant demands on companies. I mean, a company that turn over 100 crores will get a demand for 1,000 crores. I mean, there's no way they can pay it. And these demands are absolutely without any basis. Like you get a notice, a bank gets a notice taxing its entire interest at 18%. Entire interest. I mean, if you go to tax State Bank on its interest income as a GST case, imagine what happens. And then the entire expenditure is disallowed. So just imagine they simply say all the salaries of State Bank are disallowed and you levy GST. This is kind of absurdity which is going on the ground, which is okay. It's nice for us to laugh and joke, but it creates serious problems down the line, you see. And for example, the state officer levies GST on all India turnover. Now, the state GST can levy tax only on Tamil Nadu transactions. So, demands which have no foundation in law, which have no basis in law, were made. And this is what Dr. Malhotra mentioned, because what happens is, on the one hand, you want to have Viksit Bharat, you want to have industrial development, you want manufacturing sector, etc. Now, if this is the kind of demand you're going to make, particularly against some multinational companies, like suddenly you tell a automaker that it's got factories in India, but you say you have been importing fully finished cars, and you make a demand for 13 years of $1.4 billion. And then you accuse that foreign company of fraud and suppression and so on and so forth. Now, that is required to be reported by that company to their bankers and so on, as to a stock exchange. It has serious ramifications. It may make good journalistic news here, but it is phenomenal collateral damage. So that's what he perhaps meant by saying that don't kill the golden goose. You want people to come to India, people to set up units. So today what happens, why should I even bother to set up a unit in India? I can always import from other countries and avoid the headache of putting up a unit and having registrations and multiple returns and so on and so forth. So he says this, you don't kill the golden goose by making absurd demands. And the officer knows that there's no way you're going to, anybody is going to be able to pay this amount. But nobody is accountable. There's a very, very aggressive revenue targets which can't be met. Now, last 30 years I've been fighting this, protesting. If your GDP is growing at 5 or 6 or 8% also, you can't increase your tax projection by 18-19%. Where does the money come from? See, there's a limit to what Mr. Padmanabhan can pay. Just because you want to have 20% more, I can't ask you to pay 20% more tax unless your income increases by 20%. Simple. That's the point. So these are the two serious issues, and this aggressive demands is a perennial problem unless they really put an end to it and say that, look, no, you can't do this.
But Mr. Datar, surely the leadership, in this instance, Mr. Malhotra, knows this issue and is obviously cognizant of it. Yet there's a disconnect with the field staff. And secondly, if they are cognizant, why do they set such ambitious revenue targets?
I have, with other my colleagues, we have been telling the government as an experimental basis, abolish revenue targets. It doesn't serve any purpose because, at the end of the day, 97% of the tax collection on direct taxes at least comes from advanced tax and TDS. 97%. Now, the balance 3% is all what the litigation is all about. So even if you shut down the income tax department, 97 paise of the rupee is going to come in any case to the government. So, number one. Number two, it's the unless the leadership or the highest people say, look, we are not setting revenue targets, you don't have to make absurd demands. You can't. This will continue. Now, if you tell the officer that you're in Mumbai jurisdiction, last year you made 5,000 crores, this year you must make 7,000 crores. Where does he go? He has to catch the big fish, he has to catch the big companies, and then splash it in the news that he's demanded $1 billion and 5,000 crores and 30,000 crores and so on. So, what does the officer do? I mean, many of them know that what they're doing is not sustainable, but then they have to meet revenue targets. And you see, the point is, you make a demand today and you finish your target by 31st March. It's not the revenue collected. And that's why in the Supreme Court, the Supreme Court asked them to file an affidavit, and they said 77% of the cases are lost by the revenue because in the first place, you make demands which are extremely exaggerated, which have no basis, and ultimately they go. But the damage is done. The poor SSC has to pay the amount, the refund becomes a problem. So many things come, And now the new trick is you make exaggerated demand and have samadhan schemes every year, which is again, yeah. So what does the person do? He says, why should I bother to set up a unit? Like, I don't know if you know that, I'm told, I don't know how far it's true, but the total balloons sold in India, 1,100 crores, these balloons which are in birthday parties and so on. And all most are imported in China. Why doesn't anybody make them here? It's much easier to just import it from China than put a factory in here and buy the rubber and buy the latex and make the balloons. And that holds good for a refrigerator. My refrigerator, which I bought recently, is made in Thailand. My mother's blood pressure monitor is made in Vietnam. So these are the questions we should ask. Why should a blood pressure monitor be made in Vietnam? Why should a refrigerator? It's not a silicon chip which has to be made in by Taiwan or some extremely sophisticated place. See, everything is. In fact, I was surprised. I was in Rajkot, and the airport trolley for luggage was made by some Wuhan company. The airport trolley. So this calls for serious introspection. And you talk of make in India, vocal for local, all is good. The intention is good. But then the imports from China have gone up from 70 billion to 100 billion in 3 years.
So, Mr. Datar, you mentioned that in an affidavit, the Revenue Department filed with the Supreme Court, they conceded that they lost more than 3/4 of the cases they have filed. So,
Yes,
my
it's part of
question
the
is,
it's part of the
I have
judgment.
two questions here. One, that means the cost of litigation is going to be enormous in this. Secondly, the time wasted, I mean, of everybody, including the person whom they've
Phenomenal.
accused, is staggering.
Staggering. And the point is, except lawyers and chartered accountants, who benefits at the end of the day? What do you get by suddenly disallowing taxing the entire salary expense of a bank or making some completely untenable off-the-wall demand, which you know will not be sustained? Then you go to the High Court, you get a stay, then they say pay 10%, then back and forth goes on. You're right, tremendous waste of time, which can be spent for other cases which are pending in the pipeline, which can be taken up.
I also want to step back, going back not necessarily to the popcorn incident, but generally about GST. So I have two questions here. One, is this a mindset issue, a hangover from the license Raj era, where business was a dirty word? So, and as a result of tax overreach, because you assume that everybody is a potential violator. Is this the core of the problem too?
Absolutely, you hit the nail on the head. You see, the point is the law is structured in such a way that there could be two violators, and therefore, to prevent two violations, you completely hit 98% of the people. I mean, it's like saying, somebody told me, I gave a good example. I said, if you design a supermarket like Walmart, and if your main objective is to show that there is no shoplifting, then you will put so many conditions, ifs and buts and so on. You may ultimately prevent shoplifting, but then you're going to hit your sales so badly. So I've always said that, what is your priority? I mean, why do you say in the case of charitable trusts, just because two trusts do something wrong, you really take a sledgehammer and hit all the genuine trusts. Same thing in business. You have multiple forms, compliances, etc., to prevent any one potential violator. I mean, it's like saying, that because 3% banks are going to have NPAs, nobody should get a loan, or the loan should be given with so many conditions that it's impossible to. You see, we always have to always think, why should a person not set up a factory in India? Why are people making garments shifting to Indonesia, to particularly to Vietnam? Bangladesh, yes, but now Bangladesh isn't a problem. But so many units went to Bangladesh, so many went to Vietnam. In fact, I've been telling in my own way, tell me that why don't you give a questionnaire to all these foreign investors or domestic investors that what's your pain points? What are your other things? You must ask them what is their problem. You see, ultimately in marketing, the customer is king. Here in a country, the investor is king. The person setting up a business should be treated. And I've been telling people, you talk of GST collections. Till today, nobody has told me how many new factories have been set up in Tamil Nadu. That is the benchmark. You can say the GST collections have gone up by 15%. Now, did they go up because of the dollar rise? Did they go up because of commodity prices? But unless 10% more factories are set up year on year, your manufacturer is not going to go up.
Mr. Datar, I want to just move to direct tax. There's a strong buzz that they're going to come up with a new direct tax code. My question to you is this the problem with the tax laws in the country, or is it the way we implement these tax laws?
For the life of me, I don't know why we're having a new direct taxes code. The problem is not with the law. It's the 1961 Act. It's now 64 years old. We have lived with it. And in seminars, we have said that, look, apply the Pareto's rule. 80% litigation is in 20% areas. Find out the causes for the litigation, number one, and sort it out. You don't need completely overhaul the law and put a new law. And secondly, if you're going to have a new direct taxes code in the same format, that is salary, capital gains, industry, salary, capital gains, profits from business, the same, house property income, other sources, the same structure is going to be the same. Then what's the point in having a new direct tax code? Today, the problem is the implementation, the system of faceless assessments, the faceless appeals, the kind of arbitrary demands that are made. So you're addressing the wrong problem. You see, if you've got a health issue, you don't build a new hospital. You address at the fundamental, at the ground level. Yeah. And you see, this is a very common other feature. They think reform is making a new law. Companies Act 1956, you made Companies Act 2013. Now, has it made any ease in doing business?
What, in your view, is the litmus test for a good tax law, whether it's direct or indirect?
Ideally speaking, see, I believe over the years that you can't have a simple tax law, because tax law by itself, SSCs will try to beat the system. So nowhere in the world you have a simple tax law. The only exception is if you've got what they call a flat tax system in certain countries, where there's only a flat tax of 15%. There's no deduction. Everybody pays 15%. Very few countries have that. Otherwise, whether it's the US tax law, or the British tax law, or the French, the European tax law, there are complications. There's a lot of litigation. So let's go on that a tax law cannot be simple. It will be complicated. Once that is there, then the point is, you don't make demands which are completely unsustainable, contrary to your own law. Secondly, once the Supreme Court or your highest court lays down the law, you follow that law. Secondly, you give a valid hearing. Now, for example, in income tax, once they reopen the assessment, they're supposed to give you a hearing. There's no case where they will drop the demand. The assessing officer will never accept that he's wrong. He will confirm the demand. Even if he says 2 + 2 is 6, he'll confirm it. And you go to Commissioner Appeals, go to Tribunal, go to High Court, go to Supreme Court, but they will never say that, look, I made a wrong demand, I'm dropping it. Because they're worried about vigilance, they're worried about other questions being asked and so on. So it's a very, very fundamental point where you should have a tax which is to make sure that proper tax is collected, not just, you don't want to start making demands against everybody just to meet a revenue target. So if you ask me the question, I will say simple thing is, don't have revenue targets. Have a law. If it's complex, it's okay, but implement it properly. Don't unleash your tax people on your own citizens. That's the sad part. When you're attacking your own Indian people. And who's benefiting by it? Has the tax system resulted in 8% GDP growth? Has it reduced unemployment? Has it Has it increased manufacture? These are all questions we should ask ourselves. Okay, we have done this for so many years. Where has it landed us?
So, Mr. Datar, I'm curious, how does this play out at the state level? I'm sure you have experience in dealing with cases.
The same arbitrariness. The same arbitrariness. I mean, in all fairness to the center, central administrations are much better than what we find in the states, in my experience, with at the local tax levels and so on. I mean, they're also, the standard thing is you want some money, put extra duty on diesel, put extra duty on alcohol, just keep on multiplying taxes. And now at the state level, it's becoming more difficult because they have all these system of free gifts and free handouts and free doles. Where do you get the money? So you keep on raising taxes, demanding more and more money from the people. It is equally bad. At least in central level, things are more fair sometimes, but at the state level, it's not so good. You
So
see, once you take tax as a system for revenue collection, that this is my source of making revenue. How I do it doesn't matter. I must just get more and more revenue. So you unleash the officers on the citizens.
do you believe that ease of doing business, particularly the way the tax laws are implemented in this country, is the biggest challenge to setting up and growing industry in India?
Well, I'm actually working on an article. I think this ease of doing business has basically three components: ease of starting a business, ease of running a business, and ease of closing a business. If you're in the manufacturing sector, the exit is very important because 5 out of 10 businesses are not going to succeed. So you need an exit version. It will be unfair to say that tax is the cause. No, tax is a very, very important cause. But I think at the starting stage, what puts off people is the regulatory requirements. I mean, the multiple permissions and the attendant corruption and so on. That is really puts off people. It's much easier to start importing and be done with it rather than have the hassle of putting up a factory and then employing. Then starting a factory, starting point, I think your state regulations are very important because most of the regulatory permissions are under the state list under the constitution. Once the business goes off on stream, then more important are the taxes and the central regulations, Companies Act, SEBI laws, and so on and so forth. There, they can be much ease compliance, but at the running stage, taxation is very, very important. Again, at the closing stage, state laws are very important. Like in Maharashtra, Ford wanted to close down, they just couldn't close down. The law for 2-3 years, the closure went on. So that creates a very bad impression. Suppose I put up a factory, I should be able to shut down the factory, pay the workers whatever is due, and move on. I can't be asked to keep on paying salary and so on and so forth. So for ease of doing business, we have to address all these 3 points. For starting and closing business, I think the states and the centers must get together. Labor laws, regulatory laws, forming company, pollution laws, all this will be a part. And for running, I think tax will be the main problem which people face.
In the final analysis, it is clear that India has a tax overreach problem that needs to be fixed immediately. If not, it could threaten India's ambition to evolve as a developed economy by 2047. As Mr. Datar pointed out, to a large extent, this is because of the mindset that the country has carried over from the colonial era, which sees tax as a means of extraction. Together with the regulatory burden posed by states, it makes a mockery of the ease of doing business and India's efforts to project itself as the next investment destination. This is especially true when we contrast with a country like Vietnam, which is absorbing all the China Plus investments, or most of it at least. The upcoming budget offers an opportunity for a radical course correction to set the record straight, as it were, and send out a very strong signal to both domestic and foreign investors. The big question is whether the Bharatiya Janata Party-led National Democratic Alliance will seize the moment. Thank you for watching. Don't forget to subscribe to StratNews Global on YouTube. Hit the bell icon so that you don't miss any updates. And please to share your thoughts, ideas and suggestions with us. I'm available on Twitter at Capital Calculus. I'll be back next week with another episode. Till then, stay safe.